Hello and welcome to Farm Journal Live. I'm editor Clinton Griffiths from our Farm Journal newsroom here in northern Indiana as we continue bringing the latest on the coronavirus outbreak and the impact to agriculture. Hope you're all doing well out there today as we have a cold front move through the middle of the country. Of course, bringing some cooler temperatures and some rains in the middle and heart of planting season. Let's get to the headlines this morning. A new Purdue University CME Group Ag Economy Barometer out today. For the second month in a row, the index fell sharply, dropping 25 points in April to a reading of 96. It's the first time it's been below 100 since October of 2016 and effectively wiping out all of the improved farmer sentiments following that 2016 election. April's declines leaves the Ag Economy Barometer 72 points below its record high set in just February of this year. Michael Langmeyer is the co-author of the Ag Economy Barometer. And Mr. Langmeyer, this seems like a big drop. Obviously, I'm guessing related to the coronavirus.
Definitely, and it corresponds with the large drop we've seen in corn, soybean, pork, and beef prices. And so I think it's very consistent with that drop in prices. And it's very important to point out there's two sub-indices in the Ag Economy Barometer, the index of current conditions and the index of future expectations. The index of current conditions reached a new low. And so that just tells you how pessimistic people are regarding the current environment. And it currently sits at 72. The base index is 100, and that base index was set in late 2015, early 2016. That was not a particularly good time in production agriculture, so it just gives a reflection of how pessimistic people are with regard to the current situation. The index of future expectations is still above 100. It's also dropped rather dramatically in the last couple months, but it sits at 108. And again, we have this dichotomy that people are more pessimistic short-term compared to their long-term outlook.
So long-term, they think eventually we're going to get things turned back around here. But short-term, I mean, we have seen almost all of agriculture touched in some way by this outbreak and impact to mainly prices and inventory issues.
Yes, it's very, obviously it's very widespread. It touches on most, if not all, commodities. And typically in the past, we've looked at the barometer, maybe one or two crops or one or two livestock species had lower prices, but they weren't all at the same time. But here it's just a perfect storm, if you will. All these prices are lower, and so it just leads to a lot of the pessimism in the short term.
Yeah, as we look at some of the other, indices that you pulled together on this, some of those are like, are you interested in buying equipment or making big purchases right now? I know you generally track that question. You also track some questions along the lines of, land values. What do you expect land prices to do? How are those looking relative to this new reading?
Not unexpectedly, the Farm Capital Investment Index also reached a record low. That's an index of 38. Again, the base index is 100, and so that's really low. But if you think about that, that makes perfect sense. I think a lot of farms are going to have trouble repaying debt, yet alone have enough money to purchase assets. And so I think that's very consistent with the tight working capital situation we expect later in the year. Land values, as you'd expect, the land value expectations in the next 12 months, a full third of the people think that land values will be lower. That's pretty high compared to what we've been historically and been in the recent past. But again, this difference between current conditions versus future expectations, there's still 44% of the people surveyed think that land values will be higher 5 years from now. And so there's still this view, which has been consistent for quite a while now, that things are going to get better.
Okay, so looking out long term, I was going to kind of finish with what do you take away as an optimistic reading out of all of the questions asked and all of the results? Is there any one thing you think you can pinpoint that people are still hoping or expect things to improve?
I think it's the land value question 5 years from now. The fact that 44% higher and less than 10% think it's going to be lower. I think that just shows that people realize that prices are going to be fairly low in 2020. It's probably going to have some legs and affect prices in 2021, but they're expecting things to resort to more normal, if you will, longer term.
All right. Well, I appreciate the insights. Thank you so much, Michael Langemeyer, co-author of the Ag Economy Barometer there from Purdue University and the CME Group. Really great insights into what's going on right now. Let's get to some other news. The $19 billion in assistance USDA is planning for the agricultural industry appears to still be in the works. ProFarmer Washington correspondent Jim Wiesmeyer says there's still no confirmation that USDA has sent its CFAP rule to the Office of Management and Budget. However, USDA did announce its Section 32 food purchase plan, saying AMS will buy $470 million worth of products in the third quarter on top of purchases already announced. They say they will buy, or that buy will include $120 million in dairy products, $50 million in potatoes and turkey, $30 million worth of pork, chicken, and catfish, $25 million for orange juice, and $20 million for tart cherries. So, some new information there to go along with that. Another 100,000 metric tons of corn sold to Mexico, according to the latest export sales report. Meanwhile, senior administration officials signaling they won't punish China economically as long as Beijing abides by trade commitments. In fact, China making another purchase of 378,000 metric tons of soybeans in a flash sale today. Now, rising tensions and fresh threats of new tariffs and soybeans and corn lower Monday. Those markets are at least back in the green to start today. U.S. officials are urging China to follow through on its Phase 1 commitments and purchase up to $200 billion in additional American exports over the next couple of years. During an interview on Sunday night, the president saying, well, if they don't buy, we'll terminate the deal. Very simple. But Treasury Secretary Steven Mnuchin, one of the principal negotiators of the deal, said Monday that he has every reason to expect that China will honor the agreement. Failing to honor it will result in very significant consequences in the relationship in the global economy as to how people would do business with them. Of course, let's bring in Joe Vaclavik with Standard Grain now. Joe, as you look at the markets today and what we've seen over the last couple of days, this whole China conversation has been quite a bit of turbulence out there.
Well, it did seem initially like a step backward. We had seen just in the last couple of weeks and even this morning, we saw China buy some U.S. corn. They bought some U.S. soybeans. The soybean purchases were actually split up between old crop and new crop. So that's a really positive sign. I don't like when I hear the word tariff from President Trump in regard to either the trade war or the coronavirus. And I guess I could have assumed that, if China doesn't live up to the deal, yeah, we go back to tariffs. Most of us probably could have assumed that. But this additional threat of tariffs in regard to China's negligent handling of the virus situation, if you want to handle that, if you want to call it that, that's an additional risk that maybe was not on the table, say, a couple weeks ago. So that's the one that concerns me a little bit, maybe more so than anything else at this point.
Do you feel like the market is trying to factor some of that risk into the price now as we move forward? Obviously, trying to get some sort of clarity here, which I don't know that we're going to have, as this is a pretty evolving situation.
I think the market is going to trade the actual sales and actual purchases and the actual pace of export sales and shipments like it always does. And at this point in time, we're on track to about meet the corn export number for this marketing year. And we are not on track to meet the soybean export sale target for this marketing year. So I think that we may be past the phase of just trading the headlines and the talk. I think the trade we need to see the sales. We need to see China come in and buy large amounts. And if they don't, and the exports aren't going to hit the targets, we're going to remain under pressure here.
As we talk about, obviously, weather is a factor right now. We're looking at some risk for maybe some colder weather later on this week. How is weather factoring into this entire conversation with us having about, half of the corn crop now on the ground?
We've got a planting pace. We're ahead of schedule in regard to both corn and soybeans. So this is certainly not 2019. Now, could other problems present themselves? Yeah, they could. We could get into a situation where things turn really cold and dry and you don't get the crop out of the ground in the manner that you'd like to. You've also got some dryness building in the southern plains, certain areas that could affect corn production, that could affect soybean production, maybe winter wheat production more immediately. But I don't see anything in the weather right now that leads me to believe that the markets need to go higher. I don't think we're to that point yet. I think it's very, very early.
What about the ethanol situation? Has that been factored in? We're seeing a little bit of a rise in oil prices as some of these states come out of lockdown and we start to see a little more traveling, a little more driving happening, gasoline demand up a little bit. Could that help pull us anywhere?
There were some things in last week's Department of Energy report that lead me to believe that ethanol could be close to a bottom in terms of production. We saw ethanol stocks drop. We saw gasoline consumption up about 15% off of the lows that were posted in mid-April, I believe. The one thing that hasn't improved is ethanol production. And ethanol production posted essentially a modern era low, according to last Wednesday's print. So we need to see, that's going to be the last thing to come, will be the improvement or the bottoming in ethanol production. And I'm hoping in tomorrow, Wednesday, in the EIA report on Wednesday, that we start to see evidence of improved ethanol production. Cash corn is certainly cheap enough. Ethanol's rallied, crude oil's rallied. I think the energy markets have bottomed for the moment. So hopefully we're starting to turn a corner there.
All right. Joe, I'll ask it. I've been asking everybody, give me one thing you're hopeful about or you see as a sign of optimism as we move forward into May.
I'm hopeful that we get a very bearish USDA report next week. And I'll tell you, the corn report is going to be very bearish on paper. There's no doubt about it, especially that new crop carryout number. It's going to be our first glimpse of that. I'm hoping that the market takes that bearish news and shrugs it off. And if we can do that, then maybe we're close to some sort of bottom.
All right. Appreciate it. Joe Vaclavik with Standard Grain. Thanks for joining us here on Farm Journal Live. Of course, we'll continue to cover this situation and the impacts to agriculture. You can join along. Go to agweb.com for all of our news and news coverage. But to focus in on the coronavirus, you could go agweb.com/coronavirus for the very latest. Thanks so much for watching Farm Journal Live. I'm Clinton Griffiths. Have a great afternoon.
This season, rather than madness, opening days, or taking a break, the world is frozen, silenced by quarantines, isolated by distance, and edging on panic. But while work for you may have changed, out here, we're still going strong. Our season is underway. The crops will get planted, the livestock will be fed, and your food will continue to be grown, just like it's been for generations. There's plenty to worry about. But out here, social distancing is our specialty. American agriculture farms on, today and tomorrow, for our family and yours.